Good morning. You are watching a live daily market outlook for Friday, 20th of April 2012, prepared by Windsor Brokers. Not much action seen again in past 24 hours as most of the instruments hold their rather sideways movements after yesterday's long-awaited Spanish auction that showed some positive results, but still not enough to trigger some stronger movements. Spain yesterday sold 2.5 billion euros in 2 and 10-year bonds, the top of the targeted amount, but yields and the key 10-year bond were higher, and this reflects the fears it might miss its budget deficit target. The economists still see need for international bailout for Spain as they battle through their debt crisis, although their economicals may drag the Eurozone recession into mid-year. The global economy is set to expand by modest 3.3% this year, slower than International Monetary Fund estimate of 3.5%. Although another disappointing data came yesterday, despite the U.S. job data that added some evidence the global economy is on shaky ground, and also dented the overall outlook for the U.S. economy. The U.S. data came actually the yesterday's numbers showed that number of Americans claiming unemployment benefits for the first time fell, but only slightly last week, suggesting that job growth in April will not improve much after March's disappointing performance. The U.S. jobless claims fell 2,000 during the past week, and still as positive result, but still less than expected. Other data also released yesterday showed the factory activity in the Mid-Atlantic region in U.S. slowed sharply this month, and home resales dropped for a second straight month in March. The economists viewed the string of weak reports as payback after an abnormally warm winter boosted activity, and did not believe that the economy would suffer a repeat of 2011 when growth slowed down sharply in the first half of the year. The comments were like that economy really benefited from the mild winter in the first quarter, but there are no immediate concerns that the recovery is in serious jeopardy. The further following of the economy will show whether the U.S. economy is slowing, but the economists and analysts are not expecting to see a sharp deceleration in the U.S. economy recovery as it was seen last year. From today's calendar, some important indicators are due to be released. It already released the German PPI for March that came higher than forecast at 0.6%, with forecast 0.5%, and the previous release of 0.4%. The more significant one is German IFO business climate for April, that is due at 8 o'clock GMT, and there's some small drop is forecasted for today, 109.6 compared to 109.8 of the previous month. From UK at 8:30, March retail sales improvement to 0.4 by 0.4% compared to negative minus 0.8% of month of February. America's start, basically it's only Canada today. CPI for March is expected to tick higher, 0.5% for the monthly release is forecasted compared to 0.4%, while the core CPI for a month of March is expected to slowly decrease by 0.3% compared to core CPI of February at 0.4%. Canadian leading index for March Again, a slight drop, 0.4% is forecast for today compared to 0.6 of the previous release for the month of February. Quick look at the markets, the latest movements. As we can see, the euro remains in the sideways movement, directionless trading within approximately 100 pips range in past couple of days, with 130.56 shown as a down limit, and the upper boundary is at 131.71, high of 17th of February. The larger picture on 4-hour charts shows the even broader range of beginning of month of March, with upside 132.11 and downside 129.93, when the recent dip of the euro's price dented our initial and very strong support. That's the top of the support at 130.00. The very strong support zone is defined defined by 130 and 129.50. Sideways movements keeps the studies on the 1 and 4 hours 1 and 4 hour chart rather neutral at this point, with break of either side expected to define the near-term movements. On the upside, immediate barrier 131.71. On the downside, 131, and then 130.68.56. That will open way to the downside. Clearance of 131.71 opens the next significant barriers, as shown on the daily chart, that still maintains the negative structure, as most of the price movement holds below the main bear trend line drawn of 142.46 that currently stands at 131.75, so it's equivalent to the recent range peak, and the break of this level along with the 132.03, what is the 55 days moving average, and 132.11 previous high of 12th of March, required to improve the current structure and possibly open way towards higher levels and the upper boundaries of the broader past over 2 months range that started at the beginning of February, with initial strong barrier at 133.85, high of 28th of March 2012. On the downside, as mentioned, 130.00, 129.50 is very strong support zone. 130.00 has already been dented briefly by dip to 129.93 a couple of days ago, with the lower boundary of this support zone at 129.73 and the 61.8 Fibonacci retracement at 29.52, loss of which to continue the broader weakness and broader downtrend of euro dollar, and possibly open way towards 128.75, which is the low of 23rd of January, also the low of 9th of January 2011, ahead of our key support at 126.22, low of year 2012, posted at the beginning of January this year. Cable maintains its short-term positive tone after a good support was found at 158.00, with the latest rally and yesterday's action higher, breaking above previous yearly high at 160.61, posted on 2nd of April, with fresh high so far reached at 160.76. Positive tone dominates on the short-term studies and keeps still the downside, the upside in focus, as the 20 days exponential moving average follows the current trend and offers initial dynamic support at 160.51, along with the previous high at 160.61. That is basically our initial support. More significant is the low of yesterday at 160.08, along with the 55 days exponential moving average that is currently standing at 160.19. On the upside, the 4-hour chart studies are also positive, with the indicators being at their extreme points, and this might signal some corrective action as the momentum is already turning towards the downside. However, anything below 160.00 would be slightly harmful for the pair's current bullish tone, with a break below 159.50 to delay the immediate bulls. Support at 160.00, where is the 20 days moving average, is basically expected to contain any corrective action in order to keep the immediate bullish structure in play for further extension higher. On the upside, 160.90 is our next target high of 14th of November 2011, and the 161.00 is around the figure resistance ahead of group of another resistances at 161.29, the 8th of November high, and more significant 161.64 peak of 31st of October 2011. A positive tone on the daily chart also keeps the downside, the upside favored, as good support at 158.50 zone, where are also 200 days moving average and the main bull trend line, along with the base at 158.00. As long as these levels stay intact, the focus is still at the upside. Dollar yen is still in the near-term corrective mode, but having some difficulties at the zone around 81.50-70. A break of the previous high at 81.55 has so far seen a brief extension higher to 81.72. However, the positive structure on the hourly and the 4-hour charts still keeps focus on the upside, especially that currently we are facing the cross of 20 days above 55 days moving average. That might give an additional support for further extension higher. 82.00 and 82.50 are the next targets on the upside, with the structure on the daily chart, despite studies being still in the negative territory, keeping the possible focus for possible further corrective action at the upside. Key barriers are at 83, 83.40, and only break above these levels is to confirm the higher low at 80.28, which is the so far low seen of the corrective reversal from 84.17 yearly high, and only break above these levels is to confirm the higher low and the refocus upside. Currently, the 55 days moving average that faced false break during the past couple of days is supporting the current rally higher, and the clearance of the previous high of 10th of April at 81.85 this is our initial barrier to open 82.00 and 82.50 as the next targets. On the downside, immediate support lies at 81.28, where are the crossing of moving averages, along with the static support at 81.18, previous high of 13th of April, and the low of the corrective pullback from yesterday. And this is expected to contain any dips in order to keep the near-term bullish action in play for further extension higher. Only loss of this level and 81.00 would turn the near-term outlook bearish again. The dollar Swiss is weakening its short-term tone as yesterday's action broke below the short-term bull trend line drawn of 90.00 base, connecting 90 with the higher lows at 90.90 and 91.23. A brief break below this trend line keeps the negative tone in play after studies were in a rather neutral mode during past couple of days. Now the hourly studies are holding below their midlines, with the current attempts in corrective as long as 92. I would say the peak of yesterday, 91.94, stays intact. Strong barrier lies at 92 zone, and the break above this, which also marks the recent range ceiling, would turn the structure more positive on the downside. Range floor at 91.25 zone, the loss of which, along with the 91.00, is to turn the focus fully down lower, with 90.90 previous low of 12th of April 12th of April 2012 to tend the focus lower for possible retest of 90.00 base of the beginning of April 2012. Crude oil, let's just take a look on the daily, remains in the downtrend of recent peak at the beginning of March 2012 at 110.53 with low of 167, just ahead of 100-hour key psychological support seen so far, ahead of near-term bounce that was capped at 105.50. Fresh weakness is now following as the price dipped yesterday to 102.12, with the near-term studies still holding the negative tone and still keeping the downside vulnerable. As said, the immediate support is at 102.50, 102 zone, loss of which is again to refocus levels below $101 and possible test of $100 per barrel key psychological support in the near term. On the upside, the high of 17th of April 2012 at 105.48 offers strong resistance, which also marks near 61.8% Fibonacci retracement of the down move from 108.68 to 100.67, along with the trendline resistance currently standing at 106.14, break of which is to avert immediate downside risk and mark temporary bottom at 167 for possible further extension higher with the 107.70, 108.20 and the key barrier at 108.68 seen on a break. The gold is also at the back foot with the current near-term price action still being within a narrow range and in the sideways movement. However, larger picture still shows the negative tone intact after the upside rejection at 1680 on 12th of April. Since then the gold price is in the steady down move. The triangle that is formed on the daily chart offers support at 1625, just ahead of just below 1630, the recent low of that was posted yesterday, with the tone turned towards the downside. The break of this support to open the key static support at 1612, low of 4th of April 2012. On the upside, that is now firmly capped by 90 days moving average at 1671 and previous highs at 1670 and 1683, along with the trendline resistance at 1680, keeping the upside protected for now. Only firm break above 1680 and the test of a more significant barrier at 1697, previous high and 200 days moving average, would improve the current structure of the yellow metal. That was all for today. Wish you a nice day and very successful trading. Good luck.